Hello, everybody, and welcome to our weekend update. In today's video, we are going to look at earnings, as we always do. We'll look at some of the macro econ that's going on this week. We've got Powell making a little, Powell's in a panel discussion over in Europe. I don't think it's going to be very important, but you know, it's Powell, so we gotta watch that. We gotta see what's going on there. And CPI is another big one this week. Globally, you know, we're watching this China reopening. Market's still kind of focused on that. The market has been rallying. We had a good week. Nice to start off the year with an up week. So we had a really nice rally on Friday, and will we see that continue? We're going to take a look at last week's setups, specifically Boeing and Meta. We'll get into some detail there. Hopefully some of you played those. We'll look at some new setups. There's some stuff going on in BSX, NVDA, and a couple of the Chinese ETFs and a lot of the Chinese stocks. You know, there's been some big moves this week overall, so it's hard to find decent setups because things have already made big moves, and some of these we're kind of going to be waiting for a little bit of a pullback, I think, to maybe get in. But we'll get into all that and reasons for maybe holding off for a few days before jumping into things. We'll take a look at that when we take a look at the markets. But for now, why don't you go and smash that like button? And then we can get into our disclaimer really quickly, and then we'll start going through all of this stuff. All right, so everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. Let's take a look at see what we've got for earnings this week. So tomorrow morning, Monday morning, we've got Tilray. One of the puff stocks. So not very important really. I mean, unless you're following the puff. But you know, we'll see. Who knows? Maybe they've since last earnings, maybe they turned things around, and maybe that will start to turn in those stocks. Nothing really happening after the close on Monday. Nothing exciting anyway. Tuesday before the open, Albertsons. So this can give us a clue as to what's going on in the grocery business. This is going to be the first grocer of earnings season. KBH on Wednesday after the close, one of the home builders. You know, why the home builders is still doing really well is sort of beyond me. I don't get it. I don't want to play it. I don't trust it. But you know, a lot of people are playing these home builders. And so this is one of the first ones to have earnings now for a while. I think the most important one for me, and I think for the market overall, is on Thursday. Taiwan Semiconductor. So that's Thursday before the open. I think that's a really big one. And you know, there's been some interesting movement in semiconductors, the sector, over the last week, and we'll take a look at that too. And then on Friday, before the open, look at this, a whole pile of banks. You know what that means, right? When we start seeing all these banks report, that's the official start of earnings season. So we're back into earnings again. We are starting with Bank of America, JP Morgan Chase, Citibank, Wells Fargo. We've also got BlackRock in here and some other smaller banks. So lots of important banks reporting on Friday before the open. We've also got United Health Group, a really important healthcare stock. And Delta, obviously an important airline. So Friday before the open's big day for earnings. And then the following week, we'll really start ramping up into earnings as well. So that's some fun stuff. What else have we got? Oh, let's look at our economic reports. So it's a little bit light, but we've got some important stuff. Monday, consumer credit. Now, normally I wouldn't even mention this one. It's probably a third-tier report. However, I think because we're so focused on inflation, the market will be watching this. You know, this is these are your installment loans and credit cards, and you know how much does that change over the last month? So that could be interesting to see. We could see some movement on that. On Tuesday, Fed Chair Powell is speaking in a panel discussion in Switzerland about the independence of central banks and that sort of thing. So he probably shouldn't be getting into any heavy economic forecasting or anything like that. At least from the description of this event, doesn't look like he should. But who knows? Who knows what's going to happen there? So we should probably be paying a little bit of attention to this on Tuesday in case he does say something that moves markets. On Wednesday, we've got the 10-year bond auction, so it'll be interesting to see where that settles in. You know, we watch the 10-year yield fairly closely, and the yield moves inverse to markets, or the markets move inverse to the yield. So we'll be keeping an eye on that bond auction. We also have oil inventories on Wednesday. It looks like now oil inventories are going back on their regular schedule. The schedule got all messed up over the holidays, but this will be back on every Wednesday now. On Thursday, we've got the big one, the CPI, Consumer Price Index, also known as inflation. And we also have unemployment claims. So, you know, the CPI, obviously, really important. I think that everything is going to come to a halt ahead of this. And then afterwards, you know, is it a number the market likes or dislikes? If the market likes it, you know, we'll go up. If the market doesn't like it, then we're going down. On Friday, we have the U of M consumer sentiment and consumer inflation expectations, both fairly important numbers. We could see, you know, how are consumers feeling, and how are they feeling about inflation. This is fairly important for obvious reasons. Okay, cool. So that's what we've got going on this week. So like I said, it's a little bit light on the quantity of reports, but there are some important reports here. Let's dig into the markets now. We're going to look at the major indices. We're going to look at some important commodities, the sectors, of course. We'll look at last week's plays and some new setups. So, of course, we always start with the S&P 500. And here is a daily chart of the S&P 500. You know what? I actually want to start with the weekly chart, don't I? Let's take a look here in the weekly. All right. First thing I want to draw your attention to is this nice reversal, this nice hammer candle here, and this sort of rounding bottom that's going on here. Notice the buying wicks here. When you have these long wicks below, you know, the body of the candle, that indicates buying pressure. That, you know, every time the price comes down a fair ways, but it always finds buyers there, and they buy it back up again. And then we drew this hammer candle on Friday, which is nice, and with a little bit of increased volume as well, which was nice to see. So this is on the weekly chart. Okay, so yeah, so on Friday we drew. Yeah, so last week we drew the hammer candle. But you know, on this weekly time frame, it's really nice to see all these buying wicks. You know, the sellers just couldn't keep it down, which is great. So we're also looking at. I'm not sure what that's there. Are we seeing a potential head and shoulders bottom here? I think we may. Now, it's not very symmetrical, and I don't like the slope of the neckline. It's a little tiny, just bordering on steep for my liking. But let's see what happens. You know, I'm not the only one who's going to be seeing this pattern. So when we come up to the neckline here, which is also, notice, this is where the 50-week moving average is as well. We could see some important play in around that area. So what is that area? Oh, look, it's 400, a big even number, right? Or 400 to, you know, to 405. So that's going to be really important when we come into this. We're going to have to watch this closely. And that may happen this week. I think there's a good chance, a really good chance, we're going and testing this downtrend line this week. And I'll explain why when we look at the daily chart. While we're looking at these weeklies though, I want to look at the Qs. You can see the Qs don't look, I mean, they obviously look worse than the S&P 500. However, I want you to notice the support level. And again, this is on a weekly chart. We're drawing a really nice support level here on the weekly. We have supported here 1, 2, you can call that 3, 4, 5, 6 times now over the last few months. And we've tried to, this is a bit of a dragonfly doji. It's still bullish. It's kind of like a hammer, bullish for the same reason that a hammer candle is bullish. Be nice to see that come up and test that trend line as well. However, given what we're seeing in technology and the FAANGs, they finally and they've weakened. We'll look at these stocks individually a little later, but the big stocks in the Nasdaq have really weakened lately, and I'm actually happy about that. Because it's sort of they were the last holdouts, especially stocks like Apple and Tesla, and they were the last holdouts. And to see these become so weak, to me, is capitulation, and that's an important part of a bottoming process. So I'm kind of happy to see these things that are weak, and I don't really need to see these go up just yet. There are plenty of other stocks that are going up. There are plenty of other stocks that are near 52-week highs. We'll look at a couple of these later when we look at some nice setups. So there are other places we can go and make money right now. And if this really is showing us that this is the capitulation, that this is what's needed to put an end to this bear market, I say bring it on. Let these tech stocks fall apart a little bit more, so that the overall market can start going up and put this bear behind us. All right, so that's enough of my rant about tech stocks. Let's take a look at the daily charts of these indices. We'll dig in a little closer on these. Remember, keep those weekly charts in context. But here's the S&P 500. Now, we have been building a base here, a nice base, for the last 3 weeks. Okay, so after rallying and having a nice rally for a couple of months, moving up quite nicely, we pulled back sharply, and then are building this base. Now, there's a bunch of moving averages and a major resistance level overhead, and we moved right into that on Friday. That's a nice, good-looking green candle. And, we closed, almost right on the highs on Friday. I think this continues on Monday. I think we go up, and I think it's going to be fairly strong on Monday. I think that we will continue into Tuesday. So where do we go to, I don't want to be pointing, or I don't want to be predicting exact levels or anything like that, but it kind of seems to me that a good place for this to end up on Monday would be, somewhere around this gap here. And then we move up into that on Tuesday. Now, I think on Tuesday there's going to be profit taking. Maybe that happens when we hit this declining 200-day moving average. Maybe we rally really strongly and hit this downtrend line. But the reason I think that we're pulling back on Tuesday, and we kind of saw this, earlier when we were looking at our a week ahead on Tuesday. I don't think that anything Powell says is going to knock this market down on Tuesday. But by Tuesday afternoon, you will have had 2.5 days of running up. That's a pretty average time for a rally to last, a short-term rally to last. And people will start thinking about the CPI number that comes out in the pre-market on Thursday. So they will be thinking on Tuesday, I've made some decent money here. It's maybe time that I got out of this. It's had a nice run. Let's take some profit. So that's kind of what I think is going to happen this week. And then, of course, we would then probably pull back a little bit, maybe go sideways, through Wednesday. But come Thursday, I think that's when we have a really good chance, if that CPI number comes in light, showing that what the Fed is trying to do with inflation is actually working. that these higher interest rates are actually going to pay off, I think we could see a really strong move up through this downtrend line, maybe even this resistance level in around 407. So that's what I think is going to happen this week. Although I don't, I mean, the CPI is such a binary event. I don't know whether, it's going to come in light or not. I'm just planning, what do I think the market will do if the number comes in light? If the number comes in hot, if the Fed is not getting inflation under control, obviously then we will pull back from wherever we ended up. Probably test this, assuming we have broken through this 388 resistance, that would then become support, perhaps, or maybe we come all the way down, back down to the bottom of this range. So it's going to be a very interesting week, and a week that we're going to want to be very nimble if we're playing it. So let's look at the daily on the Qs. And you can see, again, not all terribly healthy, but still inside a nice consolidation above support. This is a nice launching pad for this to move higher. So we may very well see this move higher, but we need those large cap tech stocks to behave. IWM. This has also been making a base, and notice we had now a few days of consolidation sort of in the higher part of this space. So again, this leads me to believe that this is going higher. This is going to go attack some of these moving averages and this downtrend line over the next couple of days. The volatility index. This has been kind of choppy, but you can see that we have been winding up inside this triangle. We had a nice down day in volatility on Friday. It'd be really nice to see this break out the bottom of the triangle and get itself below 20. The 10-year yield. So I was last week I was worried about how strong this had rallied last week, and we looked at this base here, and it's at the time it was really only 3 days long, but it was above the 50-day moving average, and it was a bull flag, and a bull flag should break to the upside, but it did not. It broke to the downside, a couple of down days, tried to rally up. Now the 50 days acting as resistance, and we had a nice big red day on Friday, and got it back into this consolidation area. So what's next for this? Sure looks like this is going to come down and test the bottom of this consolidation here. Maybe even eventually come down and either test this, this former downtrend line or this rising 200-day moving average. But certainly looks to me like there's a little more downside in this yield, which is great for equities, right? And that brings us to the dollar index. So let's take a look at that. So here's our US dollar index. And you can see we've been consolidating sideways in this for a while now, a few weeks, over a month. We've gotten volatile in the last week in this, but it's still well within this range. And if we zoom out farther, you can see that we're kind of catching up to this long-term uptrend. Just by moving sideways, we're catching up to that uptrend. So tough call on this one. It kind of looks, this is a nasty red candle, and you would expect to see some more downside from that candle tomorrow. But we do have some support here, and the support has held quite nicely. So maybe we break through that. If we do, I'm sure it finds support at this trend line. So we may have seen be seeing the end of the decline in the US dollar, unfortunately. All right, let's move on to actually we should look at the our dollar cost averaging system, shouldn't we? Okay, so interesting week here. Now remember, the dollar cost averaging system at level 1 turned off, right? Flashed our warning where it turns red here, but didn't turn all the way off. and now it has turned back on. So it's back on in the SPY. So you can go ahead and continue to dollar cost average into your index funds. It's giving you the green light here. Not so much though in the Qs. These are still kind of red, but this MACD is still holding above here. Our histogram is just barely green. But we are well below the 20-week moving average and the 10-month moving average in yellow here. Still well below that, so you want to be cautious, obviously, in the Qs. But you can see on this weeklies, look at that, a couple of nice-looking candles here with nice buying wicks. So again, would not be at all surprised to see this move up from here. IWM. It went green again as well, with a nice hammer candle and nice buying wicks under those weekly candles. So if you've got a dollar cost averaging system on the small caps, all systems go there. All right, let's move over to some commodities. I've got gold up here. You can see the gold broke out of a nice little consolidation that it was forming over basically all through December, right? Got through resistance there. Here, let's get in there to that line. Got through resistance and it's got a little volatile. Now we've got some resistance ahead. Big question now is, does it consolidate sideways here, or do we see some more continuation up into maybe the 1900 to 1921 area? I think we're going to see more upside here. The miners are looking pretty good. This is GDX, the gold mining ETF, and you can see that broke out as well. And looks like it's going to continue higher, but we're going to watch out for this gap. This gap goes way back to May of last year. We will definitely watch that gap for resistance. Silver not behaving as well as gold. In fact, it broke out below its trend line, and it broke out below that little consolidation there, the base that it was building here. I'll just draw that in that way. It broke out below that, but on Friday, nice reversal candle here. You could almost call this tweezers, right? So I'm expecting to see silver go higher. I'd really like to see it break through this resistance level and then really start to go. As you know, I have some leaps in the silver ETF, SLV. Copper had a really nice move, a nice strong couple of days here. But it has been in this consolidation range for quite a while, and I don't like to see a big move up right into resistance, especially if it breaks through. Normally that's a failure. If we had another big move up here, I'm not going to buy a breakout. If it breaks out tomorrow, there's no way I'm buying that. If it went sideways under that level for a few days and then broke out, nice tight consolidation, I'd buy that breakout. But I suspect that what might happen here, because this looks like it wants to go, and if this breaks out tomorrow, it might be a one-day wonder and then fail, come back, retest, and then start to go up. And that could be a buying opportunity on the retest there if it did break out tomorrow. So yeah, I think there could be some interesting things going on in copper. And if you're, one of the biggest copper miners is, I'm not going to bring up the chart right now. You guys can do that on your own. But FCX, Freeport-McMoRan, big copper name. So that might be worth taking a look at. DBC, the General Commodities Index, is still being held down by oil. What's going on in these metals is not enough to overcome the weakness in oil. Speaking of which, here's a chart of crude oil. You can see we had a couple of bad days. We were, consolidating nicely under resistance, and then kind of had a couple of bad days. And now we are drawing what is in the early stages of a potential bear flag. So we'll have to pay attention to this and see what happens here, especially if we break out the downside of that. That could easily take us down through this pivot and into into the probably into the 65 area on oil. But there's some weird stuff going on. We'll see in a sec when we look at some of the ETFs. It's some real divergences going on in this whole thing. So I mean, look how weak oil has been. I mean, this is really weak. Since we topped out in June in around 120, we've really been in a downtrend. We had a sideways consolidation for a while, but this downtrend is very much intact. We look at natural gas. Natural gas continues to just fall apart here. However, it did find support at this 360 level, and this 360 level goes way back to it's an important level, really going back to June of 2021. It was, acted as support there. It acted as support all through, December and January, into January of December 2021 and into January of 2022. Important level, and it bounced off of that. With kind of a messy hammer candle on Friday. So maybe it's time for natural gas to start trying to put in a bottom. Hard to say here. I'm not interested in playing this. That's not a good enough setup for me to be jumping into that. But what's interesting is what's going on in XLE, our energy, general energy ETF. And you saw with oil and gas how they're making new lows, but XLE is consolidating up near its highs, and this is a nice looking consolidation. But it does seem kind of stuck in this range, right? And you can see on Friday it tried to break out of there. It hit that 50-day moving average and it pulled back, right? So it doesn't look ready to go yet. Maybe if this went sideways a little bit in here, maybe then it'd be ready to go. But this is telling us, so there's this divergence between the price of oil and the price of natural gas and what the energy companies are doing. And usually they're more or less in lockstep. So either XLE is going to catch down, these energy companies are going to catch down to the price of oil, or the price of oil has got to come up and catch up to what these energy companies are doing. This wide gap between this divergence between what they're doing, it can't last forever. I'm kind of inclined to believe that the price of energy, or price of oil, and potentially gas as well, will be coming up soon. But it's a tough play. I've still got my XLE position, and I've got an individual stock or two in this space. But I'm nervous about them. XOP, the oil producers. Now these are weaker. These are weakening, kind of like crude oil, right? But oil services ETF is looking very strong. It's looking like it wants to go up and attack these all-time highs. Really confusing stuff going on in energy right now. But I really think that we'll see some resolution out of this soon. So stay tuned. And I think that resolution is going to be oil going up, and it's probably going to go up quickly. When it goes, it'll probably be a big jump. So it may be hard to get into. Let's take a look at TAN. TAN hasn't been doing well. But we did get some consolidation here after a fairly big, fairly large move down. You can see it tried to fall out of that consolidation, almost got down to the to this gap here. Then went back to, when was that? October. Fell out of here and then made a nice move up on Friday. Recovered this. It rejected this. Rejected here, right? Said nope, don't want to go down. So maybe we're going to see a little move up here in the solars. And will it be more than a dead cat bounce? I think that's a tough call right now, but I think if you're selective, there might be some plays in here. I think it is worth looking at First Solar. You can see that this one didn't pull back much, right? So this is definitely in the solar space. This is absolutely showing relative strength, okay? It did pull back with the rest of the names, but not so much, and it had a big green candle on Friday. So I would watch this, for a move potentially much higher. Another name that had a really good day on Friday is Canadian Solar. This had to move down with the rest of these companies. Had a little bounce and then huge day on Friday. What is this, like 14%? Up 14% on Friday. There must have been news on this. I haven't had a chance to check into it. But I don't know how you play this now. I mean, after going up 14% and coming into resistance, I mean, look at all these highs here. This is pretty strong resistance. Probably actually change that to a major resistance. Oops. There we go. Yeah, that's going to be a tough go getting through that, I think, especially after this big run. So don't be surprised to see some consolidation, and it would be nice to see some consolidation sideways under here. Hopefully not a big red pullback, right? Now, so that's a couple of the names that are looking good in the solar space. And then if we look at Enphase, still showing a fair bit of weakness. And right back down into, remember this head and shoulders top that we had talked about, right? I left that on there because I thought it was going to come into play again. And this was the target. And look where we got again on Friday, right down to that target from that head and shoulders top. That's quite interesting. Now we're into this gap, right? Before, when it came down, it came very near to this target. But it was held back. Price was rejected at that gap. Obviously, that gap did not want to close. However, we are in that gap. We're just barely in it. We did reject at that target level, at that 230 level, but we're still in this gap. So it's looking kind of sketchy for Enphase. Enphase is looking pretty weak here, and I would not be at all surprised if we saw this gap close. And then after that, I mean, it's hard to say. Does it come down and start playing, with the support level down in here that I haven't actually drawn in yet? I'll probably draw that in. Well, if we break down through there, I will definitely draw that in for next week. But there are some support levels here. It's not all doom and gloom for this company yet on this chart, but it has work to do. There is definitely danger ahead here. All right, let's look at consumer discretionary. Good day on Friday for consumer discretionary. Is this putting in a rounding bottom here? I mean, this is, we've got a bit of a base here. But we saw some rejection late in the day on Friday. We saw some rejection right at that 21-day moving average. It's going to have to get through that, and I think fairly quickly move up into this sort of 137 area. Get up to the 50-day moving average, and then maybe go sideways for a couple of days before breaking through there. Industrials, they had a nice day on Friday as well. They broke out of this little consolidation, this little ascending triangle. Broke out the upside of that, broke through a major resistance level. So a really good day there. It looks like it wants to go and attack all-time highs in industrials. Financials also looking good. Notice the, we would have pointed out this hammer candle here, right off this 100-day moving average. Really nice hammer, and it's done nothing but go up since, right? Nice to see financials making this move, especially coming into their earnings. Because as we pointed out earlier on Friday, a lot of these banks are reporting earnings, and they will be reporting earnings the beginning of the following week as well. Yeah, financials are strong. If financials are strong, we don't have to worry too much about the market. Okay, technology, meh. Did have a nice day on Friday, but I really don't think we should expect much out of this sector for a little while. I think the best we should hope for is go sideways, build a base, just take a rest. Go sideways, build a base, take a rest, and then we can get this going. There's lots of other sectors, there's lots of other stocks that we can play in without playing in technology. Same goes for communications, although communications sector is looking healthier. And there is one particular name that we probably should be playing here. And I'm sure you've been surprised to hear me say it, because I'm sure everybody knows how much I hate Meta. But there's nice plays here. Actually, I want to dig into this a little later on. We'll take a closer look. We'll dig deeper into Meta later. Apple, had a nice reversal candle here. Big green candle on Friday. This is important, but I'm not expecting much out of this. I would not be surprised if. So the best case scenario, I think, is that this builds a base in here. I think it's important that this builds a base, and for maybe a couple of months. Like I said, these tech stocks, they've been beaten down. There's a lot of negative sentiment there. Let's go play in other spaces. Same goes for Amazon. What's going on here in Amazon is not pretty, but at least it's holding up, right? We've got a level here to work against. And I'm not saying, don't go play in these. If you're so inclined, if you really think that Amazon is going to solve all its problems quickly, maybe this is a great buying opportunity. I'm not convinced yet. I think we could see lower lows in this still. There are other areas I'd rather be, but if you really want to add into this, you're convinced this is going higher from here and this is the bottom, well, this is probably a good place to add, right? That level there has got to hold, though. Netflix. So Netflix is coming back into, now this is closed its latest gap, pretty almost closed anyway. And you remember this big gap, right, that we had been watching. It's coming back into near the top where that was. Got some nice strength. Looks like momentum is slowing a bit here. This may need to go sideways a little bit in here, and I certainly do think that it needs to consolidate up in here before trying to get through what was the top from that gap there. Google, again, another one of these tech stocks that are just not impressive at the moment, that I don't want to touch because I think there's just too much risk to the downside, even though we've got a nice little hammer candle here on Friday. Microsoft, same again. This absolutely needs to go sideways for a while. This is just messy in here. This is ugly. Even though it had a good candle on Friday. Earnings coming soon on that. When is, so before the end of the month, yeah, the 24th. Okay. Tesla. Again, we've got a lot of ugliness here. I've been warning on Tesla for a while, right? We've got this we've got this downtrend here, then we've got an accelerated downtrend. Now, I wouldn't be surprised if we go and break this accelerated downtrend tomorrow. I'm expecting a bounce here. Might even get above that level, but I think this is going to be a dead cat bounce. I think there is more downside in Tesla. Sentiment is just too negative. It doesn't really seem like anybody's gonna, even when if this comes down farther, if this breaks through 100, even maybe gets into 80, and I want to show you this 80 level, this 80 area, because there's a great we got to go way back here actually. There's a great big gap here in that area, going back to July of 2020. Now, it really is kind of a 2-day gapping formation, right? It gapped up, it had this tight little doji, and then it gapped up again. So I'm really just drawing this as one gap, and that little doji is centered there right on 80. So we might want to draw kind of a support level in the middle of that. Now, this may not be coming into play really soon, but I really do think there's a good chance that we're going to come down and play around in that area. So let's go back to the present here. Yeah, I think over the next couple of days we're going to see a bounce in this, but I think it proves to be a dead cat bounce, and this rolls over and continues to go down and puts in more lows, or lower lows, I should say. All right, so that was Tesla. Semiconductors might be seeing some movement here. I'm kind of liking, what I'm seeing now. I didn't like when I saw that this consolidation broke out to the downside. But now we put in another nice base here. We had a little breakout below that level, come back into it. Now we had a couple of days consolidating sort of near the top of that, and a nice big green candle coming out of there. I could easily see this having another nice day on Monday, coming up into this resistance and this 200-day moving average, and then maybe going sideways again for a little bit for a couple of days. Take us into Thursday with the CPI if the number is good. Then it continues to go higher. We are going to look at one of the semiconductor names in a little bit when we look at some new setups. Healthcare. All right, so healthcare sector has put in a bear flag. It broke out of the bottom of that on Thursday, and it went right back into it on Friday. So this is good, right? What happens? Failed moves comes fast moves. I think we could easily see this. And a nice hammer too, right? Would have been nice to see a little bit higher volume on that, but can't get everything. I wouldn't be surprised if we see this move all the way back to the top of this flag on Monday, and maybe even go a little bit higher on Tuesday. But that's healthcare. Let's look at biotech. It's still kind of in this. This is really big consolidation here. I drew that in as sort of an uptrend into a bit of a downtrend. But it's still in the middle of this, right? It's going back and forth across almost all of its moving averages now. Look at them all in there, right? You've got the 21-day moving average in there. Where's the 50? The 50-day is hiding in there somewhere. You can't even see them, right? They're all in there. It'd be really nice to see this break out to the upside. And again, I have a position in this. I'm patiently waiting. I've got a decent price. I think I got it. Was it here or here? Anyway, I got it in near the lows of this consolidation range, and I'm waiting patiently. But I need to see this break to the upside. REITs. Interesting, a little bit of interesting kind of price action going on here. It's sort of a bear flag, except it's going on too long, and now it's gotten really sort of volatile out here. I think this moves to the upside, but these are REITs, and REITs are kind of boring, so who cares anyway, right? Staples, huge gap up on Friday after this kind of big move down. Look at the size of this gap this is left behind here, right? Because here's the close from that day, the close from Thursday, and gapped up to here on Friday morning and just kept going. This is really nice to see, right? This is our consumer staples. They have been showing a bunch of weakness. And we don't want to be showing, we don't want all the strength to come here. We don't want this to be the only thing that's strong in the market, and it is not, so that's fine. But I'm kind of happy to see this, regain some strength here after some weakness, and I think this will continue higher. Utilities. Still continuing to consolidate. Nice little bounce here off the 50-day moving average, though. All right, so that's our market and our sectors. Let's move into some of the setups that we looked at last week. I really hope somebody got this Boeing. I did not. I did not like the gap. It's the first day of the year. I had been feeling out of touch with it. I mentioned this last week, right? Because of the Rona and everything and the holidays, I'd been feeling out of touch with the market. And I didn't want to come in on the first day of the year and buy a gap up. I thought for sure, if I buy this gap up, I'm just going to get punished on this. It is just going to turn around on me and go right back down. So I didn't play in it. And you can see that I now have regrets. But really nice move out of there. And like I said, I hope that somebody got here. And one of the reasons that I really probably should have just bought the gap and just done some tight risk management intraday on that is because of this cup and handle and because of this bull flag. Now, this first target here at 220, that is the target from this bull flag, which was the handle on the cup and handle. And it sure looks like it's going there, right? It's probably going there tomorrow. Now, the target for the cup and handle is in around 265. This could very well go there. It looks like it's got good momentum. You know what I'd like to see? Because I'm not in it, I want to see it consolidate here, nice tight consolidation right under this target level and then break out, and then I will buy that breakout and ride that up to the target at 265. That's what I'd like to see, and that's the way I'll play it if it gives me a chance, right? The other one we looked at, and it did a similar thing. It gapped up too, but this one was more convinced about this one. So did play in here, and this is the one that moves less, and then now is all up in some resistance. So a little sketchy here. Took some profits in here. Now just had really small position in this, but I do think this is going to go higher. I think this will continue. It's got to break out the top of this gap, and then we can just delete this. But it's sitting right there at some resistance right now, so it's really kind of got to get up and go on Monday. But that's a nice, strong-looking candle right here. Now, this gap here, I want to show you, because I don't like playing this gap. Because it gapped up to right onto this downtrend line, right? And this is one of the reasons I think this is going higher, because this is a big important downtrend line right here, and a lot of people will have drawn this way. Now I think there's another way to draw this trend line that we need to pay attention to if we're playing in meta. So I'm going to delete that one. And I'm going to draw on a new trend line, a trend line that we probably want to pay attention to. And it starts there and probably goes something like that. Okay, so you can see that trend line, and I think this fits sort of the most recent price action a lot better than that other trend line. So you can see that that's going to potentially be a problem. Also, this purple line here, this was the low from COVID, from the COVID crash. So I think that could come into play again, and you see that did kind of come into play as resistance. So there is overhead here, so there's definitely reasons to be cautious. However, if it gets through all of this, there could be a really quick move from here, from this 137 level all the way up into, probably through 150 and up into getting close to 155, 160, this 200-day moving average. So that's not a bad move, and that's a move I bet you could happen. That's $20 there. Could happen in, say, 2 days, because I think it could go really fast. And if you count it from here, from 130 up into there, I mean, maybe that takes a week, but that's a decent move in this. So that's my thoughts on meta. Oh yeah, right. I was going to show the intraday chart on here. So how do you play this gap? If you don't want to just buy the gap, how do you play that? Well, obviously you go to the intraday chart. So we'll do a look at that. So here we've got 5-minute chart of Meta. You can see, these are my intraday levels that I mark up before the start of trading every day. So just ignore a lot of these support resistance lines. What we really want to focus on is the gap and the gap day. So this would have been the day before New Year's. What was that? 12/30, right? Okay. Yeah, this is the 30th, and then this day right here was last Tuesday. So I want to zoom in on that a little more. Okay, but you can see the gap here, right? I mean, this is where we closed, before New Year's, and then we opened right here. So that's a fairly big gap, and when it opened, it started moving really fast, and it's kind of like nobody would blame you if you didn't want to get in on that. But there was a hint here. And there was a hint in the pre-market with this candle right before the open. And the way it was kind of stepping up. Once you started seeing the buyers come in before the open, you could have maybe bought in here in the pre-market, or certainly bought right at the open. And which is what I did. I just felt a little more confident in this one than in Boeing. Now, these red candles here scared me, but I had a decent enough entry that I didn't have to worry about it too much. And I was looking at pre-market levels in here and these levels, and my stops were way down here. So I managed to hang in. But so you get this big move up, a really strong move up, and then big red candles on the way down, and you can see the momentum slow right here. So a couple of big red candles, and then the momentum starts to slow, and the momentum comes to a stop, and we turn where, right at where it had near the highs early in the pre-market of that day, and then later in the pre-market on those highs. So this is where it should find support. So now you got to be paying attention in here. You can be one of these people buying this level, and and have your stop, down here or wherever. You can certainly be trying to buy the bottom of this range. You know me, I like confirmation. I'm going to we see this move up. It tries to go up here, can't break out. Now you could draw a line across this. To buy that breakout. That first time tried, through there, it failed. So maybe you draw a line across the top of that. And as we start to move up there again, you want to buy as it goes through there. Now it gave you a little scare, but it went right back up again. I think, there are entries here. If you don't, if you're worried about the gap, there are signs here that it's going to continue. It's going to be a gap and go. Now you didn't get a ton after that, but to me this is a safer entry than just buying the gap. And you can see, and also if you zoom in on this area on why don't we do that? Let's zoom in this area on a 1 minute chart, because you can get really granular here, and you'll see that this gave you. I want to get that line out of the way. This gave you a nice little play in here off of one. Now I don't usually recommend trading on a 1 minute chart, but in something like Meta early in the day when it's doing a ton of volume, you can actually get a lot more information off this 1 minute chart. And you can see right here, what I'm looking at is this consolidation right here. Now we really didn't see that at all on a 5 minute chart, right? This is something you're only going to see on a 1 minute chart, or maybe on a 2 minute chart. But it gives you a nice little base here, and you get this strong green candle out of here, and look at the volume start rising up, and it turns into a nice big green candle. If you're aggressive, you can be buying in here. So there we have it. There's some really nice price action, I think, in Meta on that gap. All right, let's move on to some new setups. First one I want to look at is BSX, Boston Scientific. It is building or drawing a really nice base here up near all-time highs. This line here, this 4610, this goes back. This is the all-time high from 2004. And this, as you can see, let's go way, way back. There it is right there. Back in 2004. And look how this price level has come into play so many times. Acted as resistance, failed badly in 2020 with COVID, of course, right? But it even failed actually before all the COVID, right? And again in 2021, we got a number of touches up there. Look here, earlier, was this earlier this year? Yeah, in April of this year, it went up, big move up. I mean, this should have been a no-brainer failure, right? This is why I don't like buying fast moves into resistance, because when they go through, you know, they catch everybody off guard and instant failure. And a fairly big failure too. From what? From like 47 all the way down to 35. That's a nasty move. Okay, so we've established the importance of that level. Now look at, we've come up, we've gone through, we've gone, you know, kind of gone through at a more reasonable pace. We've pulled back at a reasonable pace. We're drawing a base right on the level, centered right on it. And then we had this nice hammer candle on Friday with volume. I am really tempted to just buy any move above the high of this hammer and then with a stop below it. You can, so that would be an aggressive buy. And it's going to depend what I see, you know, happening in the pre-market on this tomorrow. But you could wait until it, you know, breaks out above these highs. And this is probably the safer move. As long as it doesn't like move fast up into there. I mean, I guess this move is only what? It's less than $1. Yeah, you know, a breakout here or a breakout above this hammer. I think it's, you know, half dozen of one, sixth of the other. But obviously, you're playing for the breakout of this consolidation range, and then you are playing to break out above this all-time high. It does, this stock looks like it wants to go higher. You can see that we've got nice intermediate term uptrend. I didn't draw that uptrend in there. You probably should if you're going to play this. It can give you some levels if this does pull back, you know, levels that you want to stop out at. But yeah, this is one that looking like it's going higher. NVDA. Another one I think we should pay attention to. Now, I was looking through, I looked at it, and, you know, when I saw this kind of setup in NVIDIA and saw what was going on in the semiconductor ETF that we looked at earlier, I also looked at AMD and some of the other semis. It doesn't look like it's going to be a sector-wide move, but I do like the way this has consolidated here after kind of breaking down out of the base, right? I think this is ready to give this another try, and this is a breakout we should watch, but I think this is a really risky play here, I think. But it could be nice. So just be careful. You guys know, you know what to do with this. I don't need to explain it. We got to talk about China. China's been doing really well for a while now, obviously on the COVID reopening. But, you know, how do you get in? If you're not in it, how do you get in? I've got a position in BABA. You know, I had averaged down a couple of times, and then I stopped averaging down, and then I was in the red, and now I'm in the green. You know, I'm kind of, I was, why don't I bring BABA up here? The position was probably a little bit bigger than I'd like, and I would like more diversification in China now. So late in the day on Friday, I sold some because, and partly because we're coming into, you know, some resistance level, and a lot of these Chinese stocks are coming into resistance levels. Some of them are coming into downtrends. Some of them are already through downtrends. But for BABA specifically, even though you know, it's got good momentum, I pulled off a tiny piece of my position in here, like 10% or something. But I just wanted to lock in a little bit of profit, because I've been underwater for so long. But I still like the stock. I still like the space. I think China's back, but I wouldn't be surprised if we see some pullbacks. So where does Bob pull back? Maybe it goes up into here on Monday or Tuesday and then pulls back. And as long as it's above this 95-ish area, I'm fine with that. I may add back in. If it comes down to 95 and then starts moving back up, I might add back in that 10% that I sold. So that's BABA. So we're seeing a lot of this. We've had a really good run. Are we overextended? Maybe. But I still think in the short term and intermediate term, long term, I think these are going higher. And just in the very short term, we might see a pullback. So let's go back to FXI. FXI is the Chinese large cap ETF. Okay, so you can see the nice uptrend here. And you can see that we are maybe forming a bit of a bull flag. I mean, it's only 2 days so far. But it is definitely looking flaggish. And it's doing it, in an area where we're maybe just under some resistance here. I think the bigger resistance comes in this 34 to 35 area up here. So I think it's got room to go. I'd still, like I said, I'd like to kind of see a bit of a pullback, maybe to the trend line and then go. I think that'll give people a lot of confidence. Just because it's run so much. And then another ETF that's worth watching is KWEB. This is the Chinese internet stocks. You can see had a nice base here and then broke out of that, and it's doing that almost identical looking flag here. But let's get that base in, something like that. And again, I'm okay if this pulled back. Into this consolidation area and then bounced off of that. I'm also, I guess, okay with, this bull flag resolving to the upside, but if that happens, I won't be playing it. I want to see a pullback first, because I want to play in some other names. I want to diversify this BABA name, maybe with JD or PDD or something like that. But I just don't see a setup in those right now. I see if I was going to get in those, it would be chasing for sure. So I gotta wait for a setup. So if anybody sees a setup in any of these Chinese names, if there's any that I've missed that's setting up nicely, let me know in the chat on the video or in the Discord, and we'll take a look at those. If you see any nice setups, we'll take a look at those names on Wednesday for Ticker Talk. Or if you let me know in the Discord, I'll bring up a chart there. Mark it up if you want. So, but I think we need to be watching these Chinese names and waiting patiently for a little bit of a better setup than this. That's everything I've got for you. Everything I've got for you guys for today. Thanks for watching. Hit that like button, share it with your friends, subscribe. Leave a comment. Tell me about any stocks you're looking at. Down in the comments. Anything you want me to look at in Ticker Talk on Wednesday. We'll take a look at those for you. Now, coming up the rest of this month on Wednesday, I've just been talking about. We have Ticker Talk, of course. You'll see another video out of me next. Where are we? What day are we? Yeah, okay, here. Next Sunday, possibly. I might take that Sunday off and do the video on the Monday because equity markets are closed for, I think it's MLK Day. Totally up on all my American holidays, but I'm pretty sure it's MLK Day. On the following Wednesday after the holiday, we're going to do another day trading roundtable. We had a lot of fun with that the last time we did it, and I think we should do it again. So that's coming up in a couple of weeks, and then on the 25th we'll do another Ticker Talk. So that's everything, guys. Thanks for watching, and hope you enjoy the rest of your Sunday, and have a good week next week.